Hello, and thanks for tuning in. You're listening to the Harrington Insurance Radio Show on Building Fortunes Radio and the Humongous Radio Network. Mike Harrington is the founder of Harrington Insurance Agency, where he and his team specialize in helping families protect their homes, their loved ones, and their financial futures. Mike helps homeowners answer one critically important question. If something unexpected happened to you, would your family be able to remain in the home they love? Through personalized guidance and straightforward explanations, Harrington Insurance Agency helps individuals and families understand mortgage protection, insurance, life insurance, living benefits, final expense coverage, tax-free retirement strategies, and Medicare planning. Mike believes insurance should be understandable, personal, and designed around your specific situation, not a confusing, one-size-fits-all process. You can learn more and request a no-cost consultation at Harrington-insurance-agency.com. The Harrington Insurance Radio Show is available through Building Fortunes Radio, the Humongous Radio Network, Amazon Music, Audible, Apple Podcasts, Spotify, iHeartRadio, and other major podcast platforms. Now let's get started.
Hello, everyone. Peter Mingils here. You are listening to the Harrington Insurance Radio Show. We are talking about term insurance today, and for those people that might be unfamiliar with Mike Harrington, he's been an insurance agent for a super-duper long time. He's been licensed in many states, has done a lot of different things, and he's been a trusted friend of ours over on Building Fortunes Radio. When he started doing something with mortgage protection insurance and things like that, I said, Mike, we got to get the word out there. A lot of people, they really are not sure. Insurance usually isn't taught in school. Usually kind of like learning it on the street, and you learn it after you probably needed it, so that's a bad thing. So we got a big platform, lots of really great people. Let's get you on the radio so you can tell people about what you do. It's got a couple of different websites, Harrington-insurance-agency.com. I'll put this in the show notes, too. That's one of the places you can go. And then we also have MikeHarrington-insurance.com as well. So you can go to either one, and then he's going to give out his toll-free number so you can reach out to him personally. And he's the type of gentleman that likes to have a conversation with you, find out what you need. If the stuff that he has is good for you, let's do it. If the stuff that he has doesn't fit for you, then it just doesn't fit. But there's only one way to find out. Talk to somebody who cares about your situation personally. I really like that about Mike. He's not going to try to tell you something just because he makes more commission on one policy or another. Matter of fact, the insurance companies actually pay his commission. So you can have a free consultation with Mike, figure out whatever you might need, protect yourself and your family, and that's one of the biggest reasons why we're doing this radio show. We've over in my family, we're getting older. I'm 64 now. My mom just recently passed away. My aunt passed away the last year, and she wasn't much older than me. And we're looking at, hey, do we have things in place? What not only for us, but what about the kids? Maybe even the grandkids right now. Not that I only have a grandchild that's maybe 15, but the reality is how about my kids? How about, other cousins and stuff like that? Are we being insured the right way? So listen in, buckle up, take some notes, and make sure you call Mike Harrington. So, Mike, thanks for being here on your own radio show.
Thanks, Peter, for having me. It's good to be back on a Tuesday, and what we want to do today is continue the term insurance discussion that we started last week that directly ties into mortgage protection insurance, which we've been talking about.
Perfect. So go ahead. Kick it off.
Okay. So for all the listeners out there that may or may not have heard last week's discussion on term insurance, I would like to start with a couple things just to get kind of caught up and kind of go over what we left off with last week, and then I'll get into today's discussion. Now, when it comes to term insurance, that's typically a policy that is set for a specific period of time, not necessarily the amount. Now, some of the common structures include level term, and that is where the stated death benefit and scheduled premium generally remain level during the guaranteed term. Then we have renewable term, which may allow the policyholder to continue coverage after the original period. And here's a big key on that. Without new evidence of insurability, although the renewal premium may follow a different schedule, in other words, current age. Convertible term, which may allow the policyholder to exchange the term coverage for an eligible permanent policy within a specified conversion period. And decreasing term, where the death benefit reduces over time, which, I'm not personally a fan of. It doesn't mean it doesn't fit somebody, but I'm not a fan of it, especially for mortgage protection insurance, MPI. And return of premium term, which may return some or all of the eligible premium when the insured survives the term and satisfied all the policy conditions. Now, return of premium coverage generally costs more than basic term, but it is an option for people to recoup their investment. Now, these features vary substantially by policy, so listeners should never assume that a conversion, renewal, or refund is included. And that is where I go over the actual policy. So what is one takeaway from the first segment that we talked about last week, which will segue into today's radio show? What is the one segment? That is, term insurance is temporary life insurance, in other words, for a specific period, designed to transfer the financial risk of someone dying during a defined period. And insurance as a whole generally works by transferring specified financial risks from an individual to an insurer, hence the insurance company, in exchange for a premium. That's what insurance is. So do you have any questions there, Peter?
Nope, we're all good. But I will say that for those people that are saying, how do I listen to last week's radio show or any of the previous radio shows? If you go to Mike Harrington-insurance.com, there's a link up on the top that says radio shows. So people will be able to catch up on all the radio shows that you've done. So that you're good. I mean, you're really good at explaining this stuff, Mike, so no questions.
Okay, so today's program, I want to get into who might need term insurance. Now, there's a lot of people running around, and of course I hear it as an insurance broker, by the way, licensed in 6 states. I hear it all the time. People say, well, I don't need insurance. I don't need insurance. Well, and they're correct. You don't need it until you need it. And if you need it and don't have it, then you've really got a tiger by the tail, because that if you need insurance and don't have it, that creates a whole new set of nuances and potential disasters as far as like staying in the home and in the school districts and that type of thing. So really, there's only really one way to approach that question. And the central question of that is, would someone experience a serious financial problem if I, meaning the policyholder, died? And that is a lot more useful than simply asking whether you're married, you have children, or how old you are. Because as Peter mentioned, I'm not here to sell anybody anything. Now, obviously, I am paid when I put a protection policy in place for an individual. I get up every morning, and my whole goal is to help someone get protected in the event of a life-changing event. And I am paid by the carrier. So people, there's no charge to work with me. I've got all the certifications, all the training, and everything else, legally licensed. And the insurance industry is a very specific, you have to be licensed, trained, and everything else. So when I'm helping people, it's a real pleasure. Like I said, it's not a sales call. So term insurance may be worth considering when another person depends on your income, or here's another one, your unpaid work, your caregiving, or your ability to meet a shared financial obligation. So I put together a little example here, and imagine a couple named Marcus and Alina. They have 2 children, a mortgage, and 2 incomes. Now, Marcus pays approximately half of the household expenses. If he died unexpectedly, Elena might have to cover the mortgage, child care, utilities, transportation, food, and future education costs with only one income. Now, a term policy on Marcus obviously would never replace him. Nothing could, but it could provide money that gives Elena choices. In other words, remain in the home, take time away from work, pay for the child care, reduce debt, pay off a mortgage, or create a financial transition period. Now, the same analysis should be performed for Elena. Now, families, here's a misnomer, Peter, and I want people to understand this. Families sometimes only insure the highest earner, the breadwinner, but losing the other parent may also create another significant financial burden. And what do I mean by that? Well, especially if one parent stays home with the children. A stay-at-home parent may not receive a salary, but the services that person provides, it definitely has economic value. When you start considering childcare, transportation, meal preparation, management of the household, any tutoring that might need to take place, and elder care might have to be replaced. The surviving partner, due to all those responsibilities, may need to work reduced hours. So life insurance needs are not determined only by the number printed on the paycheck. And that's real important for people to understand. And that's where working with me, and again, my name's Mike Harrington, we go over all this. What I like to do is if somebody calls me, I will send them a link to a needs analysis where we start taking a look at their situation. And this is not a, quick, I'm going to sell you this, I'm going to sell you that. No, I'm not going to sell you anything. I am going to offer you financial peace of mind and protection. And then if you are interested in the policy, we can enroll you in one. There's a big difference. And I honestly think insurance people get a bad name. Oh, it's an insurance guy. He's going to sell me something. Not the way I work. I talk to people, and when I enroll individuals, I feel very good at the end of the day that I help someone become protected in the event of a life-changing event. Now, when a parent stays home with the children, they may not receive a salary, but the services and everything that surviving spouse provides, that all has economic value that most people don't talk about. So the person might have a smaller need or possibly no immediate need, but we should still ask several questions. The first one is, does anyone depend on my financial support? And in the other radio shows, we were talking about mortgage protection insurance and how term insurance can be a very, what I consider inexpensive protection. Is Elena, in this example, is she jointly responsible for a mortgage? How about a car lease? Maybe a personal or a private loan, or even a business debt if her husband Marcus was self-employed? Or does she regularly support a parent, sibling, or another relative? Would someone need money to handle final expenses or settle Elena's affairs? Possibly, do I expect to have dependents in the future and would be waiting affect my available option? That's another thing. These policies, Peter, are age dependent as far as determining premiums. So what I encourage younger people to do, if you're in your 20s or 30s, now these term policies, especially a level term policy, you can have them for 10, 15, 20, 25, 30 years. And throughout the length of that policy, that premium remains level. If you remember, I just said a little while ago, level term. So the correct answer there is personal. Life insurance should solve an identifiable financial problem, not be purchased merely because someone created a sense of urgency. So I'm going to stop there. And Peter, do you have any questions or comments that you would like to talk about on that little segment there?
No. You did it. You're doing a great job. I mean, making it really super simple, and people need to kind of figure out what their personal situation is. And Mike, I think probably one of the simplest ways to kind of test run this is if like a couple, maybe they have two cars in the family. Mom's running around with the kids doing this, dad's running around with doing whatever. Then all of a sudden, one of the cars stops. One of the cars stops working, either dies, or whether it needs a major repair, or even if it's just out of commission for a little bit, the battery goes dead. What happens? The chaos in the family. Their regular routines are really messed up. Mom can't take the kids to volleyball. Mom can't go to the store. Mom can't do whatever because they only have one car, and dad's working during the day. And if you think of that as like a test run of how would your life be disrupted if a car stopped working, or maybe an injury like a broken leg or when I broke my ankle, right? I couldn't do certain things that I was able to do, and you just say now those are minor relative to a death in the family. But if there was a death in the family, there's no recovering from that. Like the car doesn't get fixed, the ankle doesn't heal. What do you do? Well, that's a major interruption. And the best way to manage that, and it's horrible when it happens, but the best way to manage it is having the things that we're talking about right now. So if some people are listening in and say, one of these days I'll get to it, this is a do it now. You got to make the time kind of a conversation. So go ahead. You're right on track. This is the stuff that's important.
Okay. Well, thank you, Peter. And the next.
Do you want to do a commercial break? Let's run a commercial break real quick, and then we'll be right back. You're listening to Mike Harrington on Harrington Insurance Agency. We call this the radio show. Be right back.
You've been listening to the Harrington Insurance Radio Show on Building Fortunes Radio and the Humongous Radio Network. Your home is more than a building. It is where your family lives, grows, and creates memories. But if something unexpected happened to you, would the people you love be able to continue making the mortgage payments and remain in their home? Mortgage Protection Insurance can help provide financial protection for your family if a covered policyholder passes away. Mike Harrington and the team at Harrington Insurance Agency help families review their needs, understand their options, and find coverage designed around their circumstances and financial goals. Harrington Insurance Agency provides personalized service, clear guidance, and year-round support to clients in Florida, Georgia, New York, Pennsylvania, Tennessee, and Texas. There is no additional fee for the agency's services because compensation is provided by its insurance carrier partners. Protect your home, protect your family, protect your financial future. Visit Harrington-insurance-agency.com to request a no-cost consultation. Now, back to the Harrington Insurance Radio Show. Take it away, Peter.
And we're back. Peter Mingils here with Michael Harrington. This is the Harrington Insurance Agency Radio Show. You can go to Harrington-insurance.com. That's one domain name. And you can also that's where you can also find the radio shows. And you can also go to Harrington-insurance-agency.com. That's probably the first place you want to stop off if you want to learn a little bit more about this and also get in touch with Mike. Mike, before we forget, let's and we'll repeat it at the end, but why don't you give people your phone number so they can call you directly?
Sure. I have 800 number. It is posted on the website. It's 877-293-3994. That's toll free, 877-293-3994. And my email address is mike@Harrington-insurance-agency.com. That's Harrington with an A, Harrington, insurance-agency.com. So another question where people get, I don't know, I think it's from a lot of conversations they have with other people and, over the years. And The question is how much coverage and for how long? Now, we reach the two questions that confuse almost everyone. How much coverage should I have, and how long should the policy last? Now, there really is no universal number, Peter. It's all on a case-by-case basis, and I'm sure you've heard rules like buy 5 times your income or buy 10 times your salary. That may start a conversation, but those things do not reflect every household actually situation that that addresses the real need. So a more useful method is a needs-based calculation. And I would like to mention on Harrington-insurance-agency.com, if you click the Get Started link, you will see, and maybe, Peter, I think I will send this a link to the needs analysis form where people can fill that out. There's no personal health information or personal identifying information on there. So, and when they fill it out and they submit it, it comes right to me at my desk. So that is a good way for people to get started. And again, there's no pressure. There's no situation, but for people, don't go to bed at night wondering what's going to happen if something happens. That's catastrophic. That's a total stress situation, and it doesn't need that. So let's talk about a needs-based calculation. We begin by typically looking at 4 categories. First, the immediate expenses and a transition fund. If something happened and you needed a transition period to have all those things covered. Second would be debts and financial obligations that should be paid or reduced. Third, the income or services your household would need to replace. And that's real important there, Peter, because if someone passes away and it's either the only income or the second income, that monies has to be replaced. Because, if you lose an income, your mortgage doesn't go down. Your lease payments don't go down on your vehicles. So that has to be replaced. And fourth, any future goals such as education or support for a dependent family member. Then what we do is we subtract the resources already available, such as appropriate savings, investments intended for that purpose, and any existing life insurance. Now, it's probably easiest for me to give you an example. We're going to use Jordan. Suppose Jordan contributes approximately $50,000 a year to a household. Jordan and a partner have a mortgage and 1 young child. They decide that after Jordan's death, the household might need 5 years of Jordan's income contribution, Peter, totaling $250,000. Approximately $200,000 to pay off or significantly reduce the mortgage, another $75,000 toward education and child care, and $25,000 for final expenses, emergencies, and the immediate transition. That produces a total estimated need of $550,000. Now, suppose the household has $75,000 in appropriate savings, and Jordan has $50,000 of employer-provided life insurance. Now, here's what people don't realize. Subtracting those resources leaves an estimated gap of $425,000. Now, that doesn't mean that Jordan must purchase exactly $425,000. It is an illustration, though, showing how a household can move from a vague guess to a reasonable estimate. And that's where I come in, Peter. We're going to go through all this, and we need to determine exactly what's on deck right now, and then what's going to be needed in the event of an income loss, a death, or something of that nature. Now, the other thing is they would still need to consider affordability, inflation, taxes, existing assets, survivor income, Social Security, or pension benefits, where applicable, and the reliability of workplace coverage. Now, another thing that a lot of people say is, well, I have employer life insurance. Now, should people count that? They can include it in the analysis, but cautiously. Now, here's the thing about employer-sponsored life insurance. Workplace coverage may be useful, especially when the employer does subsidize it. However, the benefit may be smaller than the household needs, and the employee, and we see this all the time, and the employee may not be able to keep the same coverage after leaving that employer. So it's advisable not to assume that employer-provided coverage is sufficient or even portable. That's real important. So, there's so many things to consider when you're talking about life insurance. And what I tell people, especially, with mortgage protection insurance, which term is great for that, it's more reasonable than the other types of insurance. When they can go to bed at night knowing that in the event of a financial upheaval or life-changing event that is grievous as that is, things can continue. And, important. How would you like to have to pull your kids out of a school because you can't afford to stay in that school district? And it's those little things that people never, ever think about. So let's talk about this. Once someone estimates the amount, like the example I just went over, how do they select the term length? The way to do that is to match the term to the period during which the major financial risks exist. So I would be asking how many years until the children are reasonably independent, how many years remain on the mortgage, how long until the surviving spouse could retire, and if one income is gone, you can imagine what that would entail. Real important here is how many years until savings and investments are expected to become sufficient, and how long will a business obligation or personal guarantee remain. Now, suppose Jordan's child is 4 years old, and the family expects significant dependence for approximately another 18 years. A policy with roughly 20 years of level protection may align with that need. But if the mortgage has 27 years remaining, the household might want to consider a longer term, a different amount, or another planning strategy. So available terms vary by the insurer. The important point is to match the policy duration to the financial obligation rather than automatically selecting the shortest or cheapest option. Any questions?
Yeah, I would have tons of them. Meaning, after this, I'd say, okay, you established the idea that I definitely need this. Like, I definitely need this. So all these radio shows, hopefully, take those people that are maybe on the fence and get them to go out and do something. And that do something has a lot of questions. And there's no way that I might be able to nail it if I have never done anything like this before, which really means you got to call Mike. Like, you got to call Mike Harrington, and he'll get, we'll give that the toll-free number again. So now that you're in the market, quote, mood understand the sense of urgency, you can pick up the phone and talk to Mike, and he's going to have a casual conversation. You might make a decision right then and there. If there's another person involved in that decision, have him or her on the phone with Mike. Even if you can make a decision right then and there, which many people probably can after a short conversation, but if you need to go back and forth a couple of times, Mike's going to be there to pick up the phone and help you make that decision. And then you can actually sleep okay at night. Mike, I always try to bring real-life situations to this just so people can kind of get the thing that's going on. I belong to, some chat groups online in my community, and there was just a recent chat pop up on my screen about what's going on Palm Coast Parkway or whatever the street it was on. And a lot of police activity. It was right near Bird of Paradise. There's a street called Bird of Paradise. So there's lots of activity going on the street, lots of people hugging each other. There must have been a horrible accident. And I'm thinking about, Mike, if there was an insurance agent that was there on the scene and said, anybody want to buy life insurance at this time? Like life insurance for sale. If he could make that policy work after those people had either died or got seriously hurt, everybody would be buying it. Everybody would be buying it at that time. And the reality is you wouldn't be able to get life insurance after you're already dead. So the scenario is that there's got to be a self-inflicted sense of urgency for those people that are on the fence that maybe say, this is a good idea, we'll get to it sometime, actually get off the phone and call Mike. That's all I was saying. That's one of the reasons why I'm doing this radio show, because I want to get the phone call from the people that said, you know what, a tragic situation happened. Thank God I took your advice in that action. I spoke to Mike, got insured. It's a horrible situation still, car accident, any kind of a situation like that, slip and a fall. Who knows what it might be by accident, probably not by, planning, but they got to take care of themselves. And if you're a dad listening in or a mom listening in, you got to make sure that you push this down to your kids as well, for your grandkids or your adult children or cousins and stuff. Like, spread the word. And Mike, that's why I'm really very passionate about having you here every week, because as you start to listen to it, there's going to be a lot of people, whether it's once they hear it, 3 times they hear it, 5 times they hear it, maybe something happens, they think about that notice that they get with the car accident and the people hugging, because of a horrible situation maybe something like that triggers them, but make the call. I always used to hear my friend Hank Abrami. He said one time when it came to doing something, he said, Peter, if you started with nothing and you ended with nothing, what have you lost? And I said, Hank, is this a trick question? And he said, stop overthinking it. If you started with nothing and you ended with nothing, what have you lost? I said, nothing. I said, so relative to this, if you're interested in that conversation, call Mike. If you do nothing with that conversation because it doesn't fit for you for whatever reason, and you don't do anything, what have you lost? The answer is nothing. But the answer is, what can you possibly gain? That to me, Mike, is everything. So, I'm always going to kind of beat the same drum. When you ask me a question, I'll ask people, what do you got? Like, how are you protecting yourself and your family if you have one that's important to you? And Mike, I'm going to ask one last question. Could somebody, say for instance, somebody doesn't have a family, or they don't have people that they're worried about. So, you're a single guy or whatever, and you don't have anything, you don't have to worry about pets, so you don't have to, you're a Lone Ranger, you're all there, but you care about stuff. You want to donate to your church. You want to donate to a cause because these are important to you. Can you set up any kind of these life insurances where the beneficiary could be an organization?
Sure. The beneficiary is, at the choice of the individual. So, it's all up to the individual, in a case like that, maybe pay it forward and, help others if it was donated to a church or something, how many people can they potentially help, right? So,
right.
I'd like to cover one more thing, Peter, and then we can wrap it up for today. And I'm going to be on vacation next week, so we'll have a week gap before the next one in a couple weeks. But the last thing I want to cover is, okay, we've got a needs analysis done, and we've protected a family. They're sleeping good. Everything's going along great. And there's been no upheavals, life-changing events, or anything like that. So the question is, should the calculation and current coverage ever be revisited? In other words, take another look. And my answer to that is yes. So when would you ever revisit a policy? You would review it after major life events such as a marriage, divorce, the birth or adoption of a child, a home purchase, a major income change, a new business, retirement, or the death of a beneficiary. Even without a major event, renew the policy periodically. Regular reviewing coverage, net worth, and beneficiary information as circumstances change, that's responsible. And as your agent, I'm here to do that. And the goal is not the biggest possible policy. The goal is an appropriate amount that addresses the need and has a premium the policyholder can realistically maintain. Because another thing you don't want to do is get a policy and then, you can't pay it. And then you get another policy and can't pay it. All those things have track records. So a policy that repeatedly strains the budget may eventually lapse, totally defeating the purpose. So that's why working with me, we need to have the needs analysis done, and that way people can, get into a situation where they're protected and they can afford it, and they will know their coverage. And Peter, what I'd like to do is send you the link to that needs analysis. Maybe you can put it on the show or something, and then that way people can, under no pressure, fill it out, send it to me, and then I can have a conversation.
Sure. That'd be perfect.
And then in 2 weeks, we'll talk about pricing, underwriting, and comparison policies, and just kind of keep going with that. And then, after that, we can talk about myths and common mistakes. So I've got a whole segment here on this that can really inform people. And hopefully in the meantime, maybe somebody will hear about it and I'll be able to help.
Excellent. Okay, perfect. Well, for those people listening in, you just heard from Mike Harrington, Harrington-insurance-agency.com. That's one website you can go to. And then the other one is MikeHarrington-insurance.com. And the radio shows are on MikeHarrington-insurance.com. Mike, one more time for those people. We'll make sure all this stuff is in the show notes of this radio show. So anything you give me, we'll put in the description, including your phone number. But give me your phone number one more time.
Okay, it's 877-293-3994. That's 877-293-3994. And I'm really looking to have a lot of conversations to help people out here and get them on the right track to protect themselves, their home, and their family.
Perfect. We'll see everybody next week.
Thanks for tuning in. You've just finished listening to the Harrington Insurance Radio Show on Building Fortunes Radio and the Humongous Radio Network. We hope today's program gave you valuable information, helped you better understand your options, and encouraged you to take practical steps toward protecting your home, your family, and your financial future. Mike Harrington is the founder of Harrington Insurance Agency, where he and his team specialize in helping families understand mortgage protection insurance and other important financial protection solutions. Whether you are considering mortgage protection, life insurance, living benefits, final expense coverage, tax-free retirement strategies, or Medicare planning, Mike provides personalized guidance based on your situation and specific needs. Visit Harrington-insurance-agency.com or call 877-293-3994 to learn more and request a no-cost consultation. On behalf of Mike Harrington, Peter Mingils, and everyone at Building Fortunes Radio and the Humongous Radio Network, thank you for listening. You can hear the Harrington Insurance Radio Show through Building Fortunes Radio, Amazon Music, Audible, Apple Podcasts, Spotify, iHeartRadio, and other major podcast platforms. Until next time, remember, protect your home, protect your family, protect your financial future,